Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, we're about ready to embark upon another earnings season, this one for Q1, and here to share some of their thinking with us on this upcoming earnings season, our editor-at-large, Steve Reitmeister, our research director, Shiraz Mian, and that market technician, Kevin Matris, all here at the round table for us. This is April the 12th. Earnings season starts later this afternoon after the close. Alcoa reports, they lead the parade, although the season is not really expected to get underway in earnest for another couple of weeks. This is just sort of like the appetizer reports coming out, is what I'm understanding.
Well, yeah, the load, the heavy load is not for a week or two, but you get some good bellwethers this week with Intel. I'll give you an idea of the technology sector. You get a couple banks. I can't remember which ones off the top of my head. I think Bank of America. You get Google this week. You get, obviously, Alcoa. Not a great bellwether, but certainly folks in the material space who give a good sense. So you get a pretty good taste right out of the gate here.
Okay, so not to be ignored or minimized in any way. But the $64,000 question seems to be, and Shiraz, I'm going to go to you first on this one.
Sure.
We're looking at the second straight quarter of year-over-year profit growth here, which is a real good thing. And so expectations for this earnings season are great, to say the least. But how much of this is already baked into the price of stocks?
I would say that about 100%
Really?
of the expectations are baked into the market, and that's why you are seeing the Dow and the S&P getting where it has been getting in recent days. So we have a 20+% year-over-year earnings growth expected for Q1, a significant acceleration from Q4. If you exclude the gangbuster financials numbers from the Q4 numbers, we have solid numbers expected for the whole year and then for next year as well. So it's a pretty high hurdle rate for the market and for this Q1 reporting season to cross. If we have the market come, the reports come even in line with what the current expectations are, both bottom line and top line, I would say that the market would show some signs of disappointment, and I wouldn't be surprised of that in the coming days.
All right, so based on that, 100% baked in, are investors expecting too much out of this earnings season? Are we maybe falling prey here to something?
It reminds me a little bit of when we were doing the fourth quarter earnings season in January. So the market had a nice run up till that. I think the market hit about 10.7 on the Dow, and then the earnings reports were terrific, but so much was already baked into expectations, and the market came all the way back down to an intraday low of like 98.50 on the Dow. Now, I'm not expecting that much a retracement. I would almost call it like a treading water. I think we're going to be hanging around 11,000 for a while, and depending on the height of the expectations for each report. So in other words, each company is going to have their own trial and see where they come out. So I think they're going to have a lot of trading between stocks, a lot of profit taking. Okay, that was great earnings, take the profit out, move it somewhere else. So the overall market averages, I'm not expecting too much headway from this earnings season, but each individual stock will either shine or get beaten up.
Right. So in response to what Steve just said, Kevin, there is a small group of analysts out there who believe that stocks could be in danger of repeating previous earnings periods where investors would sell off even after strong reports. Do you see any of that happening here?
Let me tell you, I think earnings season is going to be good, or at the very least, I think it'll be good enough. And I'm probably in the camp that these guys aren't. I think there is a realistic chance of seeing the market accelerate to the upside. One thing I did before I came down here is I wanted to look at the number of companies that posted positive sales surprises in the previous couple of quarters. And one thing that's interesting is that if you were to look at Q3, there were 213 companies in the S&P that posted a positive sales surprise. But then in Q4, there was 321. That is a 50% increase. The whole idea is that a company that has posted a surprise in the past should post a surprise again in the future. I think that people are really going to key in on revenue, and I think we may see a bunch of companies, even more companies, surprise on the revenue side again this quarter. So I'm expecting good things, and I think it will be good enough to support higher prices in the market.
Let me just play back and forth here, though. Okay, but that's the point. How much of that is already expected in the fact that we've had a 7% run up in the market in this first quarter? If you were to annualize that, I think we'd be in the 20 to 25% annualized rate camp, which is pretty hefty after last year's run. So right. I think we're all in agreement that the earnings numbers are going to be good. But do you think that, here again, are the surprises going to be enough, okay, greater than the whisper number to get the market to keep moving higher, let's say, from this point over the next, say, 3 to 4 weeks?
The reason why I think it will be is because if you were to look at all of the economic data going into this earnings season, you can see this with retail sales, you can see it with manufacturing, more importantly, you can see it with the wholesale trade numbers, which focused in on sales and inventories. And you also can see this with consumer confidence. Since all of these numbers are going up, I think there is a clear trend of improvement. And I think that even though a lot of people are expecting good things, I think the market is probably going to be able to surprise, or has a really good chance of surprising even the lofty expectations that we have.
All right, Shiraz, in the time that we have left, you started to mention some sectors a little bit ago that you might be keeping an eye on. At least that's how I understood it. Are there some standout sectors you want people to be aware of?
I am very interested in finance, basically the commercial banking sector. I also like energy too. But just to get back real quick to that comment that Steve made about the market kind of meandering and not really making a headway, my sense is that the market will be looking for an opportunity to pull back. I think the hurdle rate is so high that if the talk from management teams is not robust and uplifting enough, and the 10-year yield touching 4%, the market watching the Fed closely about interest rate issues, I wouldn't be surprised for the market to basically be pulling back in the coming weeks.
And you've got something about that.
You know, you're Goldilocks, too hot, too cold, just right. Okay?
Tune in again.
And with that, we will just leave it right there. We'll come back and rejoin this session here as the earnings season progresses, I'm sure. In the meantime, just keep an eye on Zacks.com for any updated commentary on this exciting earnings season that's about to launch later today. And with everyone here, I'm Terry Ruffalo.